Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, last day of the month, 30th of April. And economic data today has caused more than a correction today. It's a change of sentiment, and we are going to see that on the charts that we broke several technical levels that for bulls are quite important. So first, let's see how we did on the economic data. Today, the big important one was employment costs, and this includes benefits, wages, and the overall cost index. And all these three came out higher than expected. So these all three are a miss, and the market basically reacted to the downside for more than 80 points on the Nasdaq, because the previous readings on the benefits were quite lower. Look at this, the cost index 0.9. And this means higher inflation. This is inflationary pressure. And we have to really take into account what happened today, because this is another sign of persistent sticky inflation. And the FOMC tomorrow is going to decide on interest rates, and 4.2 on the compensation costs for workers. It's way ahead, way higher than the 2% inflation goal from the Fed. So overall, these are bad news for the inflation fight. More than that, the housing sector, it's still heating up. Month over month, 0.9 on the home prices, and year over year, 7.3, coming from a 6.6. We're expecting a slightly increase of 6.7, but no, another miss. Month over month on the house price, 1.2 and 7%. It's also pushing higher. More than that, Chicago PMI for April, 37, going lower from the 41. So manufacturing index going lower. Consumer confidence also going lower. From 103, we were expecting 104, and we got 97. Another miss. So as you can see, we are seeing miss after miss after miss and after miss. And this is pretty bad, because if you were patient today, you were getting better entries. But if you were not thinking about what happened on the economic front, you might be caught up here, because they got a really nasty open. This is the 15-minute chart, and the context basically was on the 1-hour chart. I was watching this huge wick from yesterday. When we have these kind of wicks, I like to take few retracements here to find some levels, perhaps to take some longs higher. And I was waiting for that all the overnight. And basically, this is the naked chart from today. And I got those here. Those were here. So on the 1 hour, we also found an order block right here. So I was waiting, sorry, not there. It was on the 5-minute, sorry. It was right here. Where it was here. So this is the order block that I was talking about. Order block, golden pocket, 50% retracement from the big 1-hour wick from yesterday. And this was a big zone. So I was waiting for this zone to converge to buy 17,852. And I was waiting and waiting. Look at all this liquidity being built. And finally, we got the numbers on economic data, and we basically dumped heavily. And I just throw to the window my plan, and I was watching on, let's see the 1 minute, because that was pretty nasty drop. And look at yesterday's pivot. here at basically 17,791 and a quarter. And I bought down here. I had an order, a rest order down here with 10 points of risk. And I got 43 for a 1.4 risk reward ratio on the 50% retracement of this entire candle. So I was pretty quick on the setup because usually when we have this kind of drop, there's a lot of liquidations and then we got a big bounce. So this bounce continue until we got the trap of the day. Bulls were saying, okay, everything is good. And then they got trapped. One time and two times. Look at this resistance up here. Sellers everywhere. And at the end of the day, they just throw the towel and you can see how everything is collapsing. On the 1 hour time frame, we are now, this was the order block that I was also watching on higher time frames, the body of this candle. And we are not holding that either. So let's remove unnecessary levels that sadly are not holding. This was a nice trade on the fib retracement. And let's see how we are dealing overall. This is the fib retracement that was really beautiful for Friday bounce into the weekend. And these two zones are basically two of the zones that I have for these fair value gaps. There's a 15 fair value gap and there's the 30 fair value gap. So in between this zone, I think it's a good zone. It was on Friday and today it happened to do so again. But the context is different because right now on Friday, we were just consolidating after a huge boost and we continue higher. But with today's economic data, I think this level it's quite risky. It worked on the bounce for today. It marked the low of the day, but I can see this market continue lower because fundamentally today has changed. So be really careful on what kind of lows you are taking. We are basically bouncing again, and this fib retracement can also be extended. Let me just throw that, continue that to tomorrow. There's another order block on the 1 hour even lower, but at that point down here, we just retraced all these bullish fair value gap. And I don't want to see that level touched today nor tomorrow. Tomorrow is going to be a pretty damn high volatile day because fundamentally everything is changing, and I think these levels on a technical level, those can be destroyed when fundamental data comes out. So be really careful. This was my plan. It didn't work. I adapted. I bought the bounce with 10 points of risk. It worked. But trade your plan and plan your trade always. Why? Because dollar it's also surging. Yields, the 2-year yield are pushing higher above 5%. The 10-year yield it's 1% today in the green, crossing 4.6 zone. Treasuries are being destroyed. High yield corporate bonds are being rejected again from the previous consolidation zone. Russell, it's also small caps being annihilated, minus 1.36, and the entire Nasdaq, except PayPal that got earnings today, it's just in the red. Red, 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 red. So everything is red, financials are red, breath is red. Crude oil was trying to push higher and it got demolished. Gold got demolished. Basically, money is being out of the market. If we check internals, we were super bullish, but look at these internals. This is the volume coming out of the market. This is the advanced decliner coming out. So decliners everywhere. And for the Nasdaq, we have also volume coming out and advanced decliners. Excuse me. The advanced decliners also going pretty damn low. Tick chart showed a little bit of bounce on the numbers on the economic data, but we are just being annihilated everywhere. So if you were waiting, if you were trying to find a reason to wait for tomorrow, this is it. This is a market that is just continuing lower. This zone up here, it's the volume profile of this entire zone. And as you can see, there's sellers up here, and now we are up here. So sellers are pressuring here. If we remove every indicator, we can see that after all this accumulation, we broke down, we try higher, but now we are basically pushing lower. So this move, it's kind of possible after tomorrow. This move to take liquidities and continuing lower. Let's see how much. Because at the end of the day, we want to see from all-time highs how much of a retracement would be 10%. That is the usual pullback. 10% is going to be to get us to 16,650. That's possible the same way that we can possibly go higher after tomorrow. So don't get me wrong, I am quite bearish. I will still look for longs, but after today's move, I think any kind of bounce is going to be met by a lot of sellers up here. So I think midterm, we are going to continue lower. We are going to grab a lot of liquidity down here, and below 17,000, we might find more buyers. But everything can change tomorrow, because tomorrow is FOMC interest rate decision. Jerome Powell is going to speak, and every technical analysis is going to be out of the market, out of the equation, if Jerome Powell surprises with something. So that's why if you missed today's short, if you were bull and you were just caught in this kind of moves, that sometimes happen. That's why you have to manage your risk and pay attention to your plan. If your plan is not working, you have to cut those trades. And managing your risk, being patient, be disciplined, and knowing when to wait and when not to trade or continue trading like today, it's one of the best skills to have. So my recommendation is wait for tomorrow to see what happens, to see the data, to see and hear Jerome Powell. And then towards the end of the week, we can reassess the situation, because right now, today is a bloodbath. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. Live to trade another day should be your mantra today. Discipline, risk management are key for your success. Stay safe, everyone, and see you tomorrow.